for joining me today, everyone. I also want to introduce a little bit because, no one wants to hear my introduction. We want to hear Dr. Jim Thorne talk. But Dr. Thorne, thanks for joining me today. We did a quick podcast, and really what it is an extension of the article that you had just written, along with numerous appearances that you've done as well. I'll let you speak to that. But really, just we had the U.S. elections. It's been on everyone's mind. A lot of time when you have an event happen, there is, I don't want to say pre-hysteria, but there's a lot of sentiment, whether they be warranted or not warranted. I wanted to chat with you to speak to our clients and our network alike. What does this mean? What should we really be looking at? What did we get right? What did we see? What are some things that maybe we should be seeing down the road? I will let you take the floor.
Dimitri, when I joined this business, I frequented the New York Stock Exchange on the floor a lot. And one time an old trader pulled me aside and he said to me, Jimmy, there are three people in this business. There's one group of people that make things happen. There's another group of people that watch things happen. And there's another group of people that say, what just happened? Right. And, Dimitri, what you and me and what Cresco and what we do is we try to get our clients and ourselves into the watch things happen or make things happen bucket. It's not the what the heck just happened bucket. So for those of us who have been in this conversation, we've been talking about a potential Trump victory for a long time.
Yeah,
and our view had been that not disrespecting the mainstream media, but really the aggressive and shall we say, the extreme policies were with the Democratic Party, not with Mr. Trump. And when you think about Mr. Trump winning the popular vote and also carrying most of those swing states, right? His policies are moderate. And that's the thing. I know when I was in New York talking, I was shocking people saying, look at what he said and look at who voted. And then you'll sit there and you'll see the postmortem and you'll see finally people from the centrist in the Democratic Party. Dimitri, when I lived in Washington, D.C., I was a moderate Democrat. Right? The Democrat Party and the Liberal Party in this country have moved to the extreme left. Okay? And you have had a referendum in the United States that they have said, look, your extreme left policy is not what we want, right? So I don't think anybody should be surprised about what's happening. Those people who are surprised are the only people, I think, that get the majority of their news or their thoughts from mainstream media. And you've got to tip your hat to Elon Musk for taking over X or Twitter, because the number one source of news for a majority of society now is X or our podcasts.
Yeah.
Joe Rogan, YouTube, right? Like what you're doing, Dimitri, right? And so for those who use the CBC and the CTV and the CNNs and the MSNBCs for their source of news, all I can say to you, folks, it's like getting your news from AM radio, guys. You're taking your point of view from the wrong area. So those people who get their news other ways, or their point of the world, their view of the world other ways, are not surprised about this, right?
Yeah.
And I think, Dimitri, last thing I would say to you is, and I've been across the country, came into Calgary, we had talked to clients, is when we would sit there and say Trump's going to win, I would say that most of the Canadians were in the what the heck just happened camp. They had not started to really work through what the heck this means. Okay. So there's my preamble. Hey, folks, if you are surprised, then it's because you're getting your news from the CBC. Wake up and smell, or CNN. Wake up and smell the coffee, because the majority of society in the United States is not surprised.
Yeah.
Right.
And one thing I admire and much like your articles and our approach to wealth management portfolios, what we're looking at is it's important to clear the smoke, especially in today's age. Like, look, like you say, we're doing a podcast right now. The information's out there. And if you look deep down and you start, one thing that I noticed was this, as you just said, better than I will, is this was a policy decision. And when you get really granular as to what demographics, where voters and what people were actually voting on was on policy, whereas everyone else, I feel, got so caught up on the uh, second Trump attempt during,
I'm
coming
not
out of
Trump,
COVID.
right? I'm
Yeah,
not Trump. Vote for me, right?
exactly. This
And
was
I am
different.
sorry when you would listen and talk. So, I lived in the States for 20 years. I talked to friends. Look at critical race theory, no, parents not being allowed to talk about the curriculum in the schools. Okay. The border, inflation, the private sector buckling, and the only place that jobs are being created is the government, which is on steroids up here, folks. Right? I mean, 80% of growth of GDP is Justin Trudeau. Okay. All right.
Yeah,
That is unsustainable. Folks, that is extreme policy. Not extending tax cuts and cutting the corporate tax rate from 20% to 15%. That's not extreme. That is focusing on a pro-growth policy that we need to grow ourselves out of this fiscal mess. And Trump offered an alternative, and the other side offered, I'm not Trump. And the people leaving the MSM or the CNN and getting their information, Joe Rogan gets more views on his podcast than all of MSN mainstream media in the United States put together. Why didn't
incredible.
Kamala Harris go on Joe Rogan? She was invited. Joe Rogan is a Democrat. Elon Musk is a Democrat. Folks, what you've got to understand is these people didn't leave the Democratic Party. The Democratic Party left them. You can no longer, the American people said that they are no longer going to elect extreme, progressive, left wing, ideological policy. Full stop. That's
Yeah.
the big statement, right? That is the
Going
big statement.
Yeah, to pivot here, where we talked about the markets, you talked about up here in Canada, and you're saying policy as well. The first question or one of the first questions, I should say, is whether we hear it from clients or we're talking it abroad. What does this mean for the market? Should we be bracing for any particular thing? At the end of the day, Jim, does it really matter if a Democrat or a Republican is in? What are the things we're looking at? What are the things you're looking at? Really maybe to hone it back in, so to
Okay,
speak.
so let's go through this process, right? First, let's start with the Fed. Okay.
Okay.
Um, I've come up with this term because I was look at the interest rate policy that the Bank of Canada implements or the bank or the Federal Reserve implements is lagged. Okay. What that means is, let me just be clear. So I call it the effective lagged Fed funds rate. Even though the Federal Reserve cut 25 basis points yesterday, even though the Bank of Canada cut 50 basis points a while back, those rate cuts will not be felt in the real economy until the spring of 2026. Did you hear me? The spring. The interest rates that the real economy are going to deal with next year, this is baked in the cake, Dimitri, is 5%. So the
Hmm.
economy with extremely high real rates is
Yeah.
going to slow.
Yep. Okay.
Stop. But now for investing, when the Fed cuts rates, risk assets adjust instantaneously to interest rate moves forecasting out the future. Okay. In environments where we just had China increase liquidity into the system, The
which you
Fed,
called, by the way. I
yes,
was thinking of when that
yeah,
article came out, I was thinking of you immediately. But we'll
right. We
get
had
to
that.
that
So,
another day.
so when the central bankers, pardon me, from around the world start cutting or introducing liquidity into the system, risk assets do very well, right? And our objective is, as the real economy is declining, because they're dealing with rates of interest that were set 18 months ago, right? What is the best way to build your portfolio? And the data says when you're in this transition period, Dimitri, and I'm gonna beat a dead horse. The number one performing asset class is Bitcoin. And the reason why, and gold, I'll put gold in there, and they're in their purest forms, because there's no execution risk, right? There's no execute. All you're doing is you're trading the liquidity coming into the system. What risk assets manifest in the best way liquidity coming into the global system, even though the real economy is buckling under high interest rates? It's gold, not gold miners, but gold. It's Bitcoin. There's no company execution. There's no problem in earnings or what have you. So if you go back to the period of time between 2009 and 2019, or the last time we had this type of environment, Bitcoin, the NASDAQ 100, the S&P 500, okay, and the TSX, those four rankings. Let me give you the numbers in the equity. Between that period of time, the NASDAQ 100 per annum, and remember, folks, history rhymes, it doesn't repeat, and past performance doesn't predict the future, right? I'm qualifying. 19
There
and
you
a
go.
half
Yeah.
percent, 19.5% return. PA.
Okay.
S&P, 14.5%. PA. TSX, 4.5%. Build your portfolios. And the number one outperforming class was Bitcoin, that averaged about 200% a year. Okay? So all of my job is to tell you that's the environment you're going into. And oh, by the way, people go back and look at what President Trump has done in the past, and what you may not like him. I get that. That's not your job. It's not about personality. It's about policy and how are we going to make money.
That's correct.
What he says during the election, he's going to implement. So let me give you an example. Why did Bitcoin go? Bitcoin went because he said that it's going to make it a Treasury reserve security. He's going to tell the Treasury of the United States to buy 200,000 Bitcoin every year for 5 years to get 1,000,000 Bitcoin. He's also said this is the way, on the record, it's there on TV. He's saying this is the way that we're going to pay down the debt. Okay? There's only 21 million coins, Dimitri. Okay? Hey, if the United States uses it as a reserve currency, do you think maybe China will? Or Europe? Do you think other central banks from around the world will follow the US lead? What do you think? Or how about Michael Saylor basically using a publicly traded company sitting there saying, we're going to use our cash and you put it into Bitcoin? Now, you might think he's crazy, but you know what happens, folks, in December? The number one issue at the Microsoft board in the election is they want to force the Microsoft CFO to have in their corporate treasury Bitcoin. Do you want to be those who make things happen, watch things happen, or ask the question, what the heck happened? Right? I've done my job, right?
Yeah.
But so corporate taxes are going to be cut. Why are regional banks taking off? Why are banks taking off? Dimitri, let's get some fancy. We're going to talk fancy here, right? The big thing that the central bankers talk about is the reason why we have to take rates so low is because the monetary policy transition mechanism is broken. Full stop. That's a fancy term. And what happened between 2009 and 2019, the Fed cut rates, the Bank of Canada cut rates, and the economy didn't respond. And here's where I differ, and it's in the last article. And you have to read the article carefully. Where do I differ? Your local bank is the institution that creates credit and creates money in the economy, not the Bank of Canada and not the Federal Reserve. The
Hmm.
Bank of Canada can cut rates, but if your local bank doesn't want to loosen lending standards and lend out more money, does it matter? No. If a
No.
tree falls in the forest and nobody's listening, it doesn't matter. So, how do you solve that problem? If we want to go back to a interest rate structure that was similar before the global financial crisis, so we had low interest rates, they just weren't at zero, right? What happened after the global financial crisis? We increased the regulation on our local banks, didn't
Yeah.
we?
Yeah.
So it made it less profitable for them to lend. Mr. Trump understands this. It's called deregulation. With the Republicans winning the Senate, Elizabeth Warren no longer is the head of the Senate Finance Committee, which means the Democrats who have been pushing against the implementation of blockchain technology and Bitcoin and the deregulation of banks will no longer be in power. And that the smart money says Trump says what he's going to do.
Yep.
Demetrius, the number one industry that supported Trump in the election was the crypto industry. They spoke with their pockets, with their wallets. Do you think that the Biden administration legislation that was crippling this sector is going to be repealed? I think that's a pretty good shot. You get so that we're going to have a new head of the SEC. That's why Bitcoin took off. And if you were listening to us and talking to us over this period of time, you wouldn't be surprised about what we're talking about.
Yeah, exactly. That's a good point, Jim, because this is, I have to say, for those that aren't on our newsletter, and please comment, you can reach out to me, we can get you on, because a lot of the narrative, not a lot, the way that you propose the narrative, in which I like for our clients, is you tell a continual story. It's not just an ad hoc piece for the sake of it. And you're right, whether you join us for a breakfast, listen, the articles, seen you on TV everywhere, this is a common theme for years, dare I say. I want to pivot really to another question that I know I'm getting from clients, or that someone is probably already asking, is, well, what does this mean for Canada when it comes to, let's say, Trump policy? If people will have
Well, let me
the
let me be
PTS,
so
yeah,
let's eliminate Trump and let's go for I have traveled across the country and I
okay,
went to another. I'm not gonna tell you where. Well, I was on the Rock
okay,
and doing the same presentation that I do with you guys in the boardroom, but it's different, right? Because so let me just be frank about this, right? Newfoundland has been blessed with natural resources.
hmm,
It should feel the exact same way as when I come to Calgary with regards to the policies from Ottawa.
okay,
And yet there is
and
a large cohort of that citizenry that voted for Trudeau. And in my presentations, I try to be provocative and try to get the thought juices going. And so in my presentation, there were very well connected people in that industry that I told you about, and very well connected people in the political sphere. And some of these folks just came back from Europe, meeting people, very powerful people in Europe. And remember what Europe is not communist, right? Europe is, think of G7 countries that Justin has photo ops with all the time, right? Folks, coming from heads of state, that's as high as I'm going to say. I'm not going to, Nobody is
Gotcha.
going to invest in this country until we vote Justin Trudeau out. So stop asking that question. Dimitri, stop asking that question. The question doesn't change. The narrative doesn't change. I will not change my view until Canadians kick the Liberals out. So stop it. Like, it doesn't matter what your local news person say. Global money is not going to put a dime in here. Okay? I get calls from around the world of people saying to me, very powerful people, connected people. And these people are not from extreme right publications. What are Canadians thinking? Do they not look in the mirror? Dude, we're becoming the laughing stock of the world. Demetrius, per capita GDP is about to go below the OECD average. Dude, let's be honest. That's a friggin' embarrassment.
Mm-hmm.
Do you understand? Can I say that bluntly enough? Productivity growth is negative. So can we stop walking around saying, what the heck is happening? Everybody thinks we're a fool, dude. Go back to high school, right? Stop it.
Yeah, we're
You know
not
what I
invited
mean?
at the smoke doors anymore.
Yeah, no, yeah, but you get my drift. So everybody
Totally.
goes like, so as for your listeners, like I know you get, but for your listener, stop it. Stop asking the question.
Yeah, and that's
Until
why I want.
Justin leaves, nothing's gonna happen.
Yeah. And that's and I agree. And that's why, yeah, you get these questions, and it's important to do these to be like, what are we really looking at? What really matters? Uh, because everyone since the election looks for opportunity of content, right? Oh, the election happened. I mean, we're getting emails from what does it mean? Join us, this and that. But we've been steadfast. You've been very clear. You're looking at the things that matter, which I appreciate, and that's why I wanted to take the time to make sure that we're talking about it. Let's pivot here. We'll go last question, whether I should be asking it or not. And I'm just kidding, but no, but so to sum up what we talked about, policy matters, certain things matter, clear a lot of the smoke. What are we looking at? As you mentioned, 2026 earlier, to circle back, 2026 seems to be a year where decisions made today will take effect at that point. So give us the next couple years in a nutshell, Jim, and then we can sign off for today.
Economic growth is gonna continue to slow in 25, but they're going to continue to flood the system with liquidity. So risk assets do good in 25, 7,000 is the target. Get out of Canada, buy innovation, buy assets that that appreciate in eras or times when economy slows and liquidity comes. Take Trump at face value. All right. Take Elon Musk is going to cut $2 trillion out of the government. All right. That is over 1% GDP. Are you tracking with me? Right.
Mm-hmm.
But he's going to have tax cuts. And we've got $1 trillion worth of AI capex. So there's going to be this yin and yang. My call is for a soft landing, but I don't know in 2026. If we look at history, going from a period of time where you've got debt to GDP at such a high level, so you are dependent, Canadians, on government growth. 80% of GDP growth is government. That's wartime. And then you go to an economy that's based on the private sector. When we go in do that transition mode, right? We typically have a hard landing. Why out of Canada and into the United States? We have a pro-growth policy that is being put in place that should allow the Americans to scoot the recession. We don't have that up here. You get me?
Agreed.
But the
Agreed.
question is, I think that we're going to have we go to 7,000 next year, and I am worried about 2026. And the last thing is, Dimitri, and I have to say this, I, in my position of as a strategist, and you know me, because I think this is game theory. This is like we're playing cards or we're playing a game of Risk. Okay. Look, we're talking probabilities. And the one thing that I try to say to you guys with Dimitri is I go, look, there are times when we're going to be able to make outsized gains in our portfolios. And then there are going to be times when we need to get defensive and preserve capital. In those periods of time where we get outside gains, we have to take advantage of that. You get my drift. So
Yes.
that's why we've been very bullish. But listen, folks, I think 26, the first 10, I think going into 26, in my mind, it's thinking we rally into January, February of 26, and then you want to get defensive until October. And I think you're going to get, let's say, 7,000 end of 25, early 26, and then we go back to where we are right now, 6,000. That type of a correction, right?
So
Do you
then
want
you're
to
of
do?
the opinion, so you're
Yep.
in of the opinion, I think you mentioned this before to be reiterate just for the sake of the pod, is you want to sell the highs, not buy the lows. Is that correct?
Yeah. After 65, now after 6,500, we sell the rips. We don't buy the dips. And
Gotcha.
we plan on 26 being a really tough year. And it's going to be a year where we're not going to get outside gains. And if we preserve our capital well, and it's up 4 or 5% by the end of the year, we've done a job of preserving capital. And if we sell at 7,000, get defensive, and then the market goes back down to 6,000, we're happy because we've got capital and we're going shopping,
Yep.
right?
Yep. It's
The
Black
other thing I
Friday.
want to say for your listeners, and I just want to sneak this in before we go.
Sure.
President Trump said that he wants to reduce energy prices in half in the first year. Did you hear me? Calgary, did you hear me? He's true to his word. I would not be surprised if it's drill, baby, drill. And I would not be surprised if Saudi Arabia follows through on its rumors of to protect market share, which, by the way, Demetrius, if you listen to company calls, is what they're doing right now, which is deflationary, right? Hershey chocolate today basically is cutting prices to defend market share. People aren't buying chocolate bars. Walmart, they're cutting prices to defend market share. Folks, that's deflationary.
Yep.
Okay. So am
Yep.
I saying that the energy cycle is over? No. Am I saying that the companies are not better, are really well managed today? They are better well managed today than they ever have been. Will they weather the storm? Of course they will, better than they have before. But what is going to be the emotional response when oil is trading at $50 a barrel? West Texas. If you think you can handle it and you don't want to handle it, then you sell. Go back to how I started off. There are people that make things happen, there are people that watch things happen, and there are people that are saying what happens. Don't be, when it's at 50, a what happened, right? You know it's going to happen. I just told you. President Trump just told you he's going to follow through on this.
Mm-hmm.
Do you want to make things happen and prepare for that and reduce your exposure over the short term, right? And if you think about it, with the heavy weight of energy and the TSX, it's another reason to be out of Canada. But to be clear, Demetrius, and to your listeners in Calgary, nobody is saying that the cycle is over. Do you understand? Like, but think about what it was like in 2014 when Saudi Arabia defended market share. Oil went below 30. Remember the bust. So we're going to be in a period of time right now. Things are going to be really good, but you need to start planning in 2025 for a rainy day.
Thank you. No, I appreciate it, Jim. And before we sign off here, I just want to say, let everyone know, because off air, before we jumped on, you've been on some publications, you've been on some news channels. Let us know where we can find you, where we can see you, what you got coming up.
The best way is to follow me on Twitter. I drop everything on there. We also drop market insights on there. On Twitter, X, I'm at Dr. J Strategy. And everything that I drop and everything that the marketing team repurposes for with Wellington office, I drop. If you want my conscious stream of thought of what I think is going on when I'm watching the Leafs lose, I'll be tweeting away, given the fact of what's going on. Do you understand? And so I'll be
I
telling you
want
my thought.
I want to
I
point
know.
out that I didn't bring it up this time. I was a
What the
good boy.
Leafs? We're planning the parade already, buddy. What are you talking about? This year's different, man.
This year is different.
This year's
Hey.
gonna be different, baby.
Okay. Quick question: Bitcoin or the Leafs? What's a bigger return on investment?
Oh, Bitcoin.
Bitcoin still. Okay.
I'm certain about Bitcoin. I
Fair
I
enough.
and the reason why I want to say this to the folks and why I keep hammering on it
Yeah.
is we are about to enter in, folks. We are about to enter into the FOMO stage of this secular bull market. This is the fear of missing out. All right. We came into this year I was down in New York and we were talking in the green room and they were saying that was a great call. I go, dude, when I was on talking to Charles Payne and I go, dude, I know you called 6,000 at the beginning. Everybody thought you were crazy. I go, yeah, you
Yeah.
think
I
I
remember
would be
that.
getting the attaboys, right? And he starts laughing. No, what happens is all these folks, they do the PowerPoint presentation thing and they go, yeah, I'm bullish on the market. Like now you're bullish on the market. It's 6,000, right? And so what I'm saying to you is with Bitcoin, this is your last chance, right? It just broke out. You understand? Trump's getting in. He is going to be
Yeah.
good on his policies. If you miss out on this, you don't blame me. I've been banging pots and pans since this was 25K, right? And it's a volatile asset. I get it, right? But my job is to make sure you're not the person that is in the what just happened crap.
Fair
What the
enough.
heck is going on, right? You're not in that tribe. You don't want to go into it. It's not for you. Just like you don't want to sell oil, it's not for you. You want to ride it out. God bless you.
Yeah.
That's what makes a market.
Love it. Last thing I'll leave for all the listeners as well. That's right. We are in Calgary, Cresco Wealth Management. We are a Calgary firm within Wellington Altus. February 26th, we actually have Dr. Thorne coming to Calgary. I believe we got a couple presentations that we've booked you for. So you can reach out to me directly. You can just find on our website, crescowealthmanagement.com. And again, Dimitri.Korolis at wellingtonaltus.ca. You can email me. I can give you the information or reach out to our channels. But Dr. Thorne, thank you so much. Again, last minute call up. I really appreciate your time and looking forward to having you in February. We should probably do something again before the end of the year. These are fun.
Cheers. Be safe, Demetria. Anytime.
Oh, hold on. And then we'll go to stop recording. Stop recording. Stop. Okay.